the take profit. Let's imagine that we have some sort of market movement, which is illustrated by this line chart on the left. And also, let's assume that your analysis at this point in time suggests that we should enter into a buy order. And that's exactly what we do. Well, a take profit is an additional order which you can make part of your buy order. So basically you can make this alteration to your buy order, specifying that if the price ever reaches a certain level, then you want your buy order to automatically be closed. So you can always close any order manually with just by clicking on it and telling the trading terminal to close the order. But in this case, you are embedding a condition in your buy order, which is called a take profit. And this condition will check whether or not the price is at or above a certain level, which is marked here with the red line. And as soon as the price is at that level or above it, then the order will be automatically closed. So let's have a look at an example. Let's assume the market kept moving from where we entered, went up, then went a bit down, and then shot up straight through the take profit level. The green cross here marks where the order would have been closed, so you wouldn't have to do anything at all. It would happen automatically. And therefore you would earn a profit from this order closing, and that's why this is called a take profit. Now, for a sell order, we have a similar situation. Let's assume this is the market line chart, and then our analysis tells us to enter into a sell order, which we successfully do. Well, we can also embed a take profit in the sell order. As you would imagine, the take profit for a sell order has to be below the entry point, because we will earn profit if the market goes down. We're taking a short position in the market. So let's see what happens next. The market goes against us for a bit, then goes in our favor, then kind of flattens out a bit, and then it goes straight through the take profit. The concept of a stop loss is very similar to a take profit, but it is the other way around. It's opposite, actually. So this is our market movement. We enter into a buy order, and we can embed a stop loss with our buy order. So it's an additional order in the Forex market, but it is linked to our buy order. So basically what it means is, if the price was ever to go and reach this red level or go below it, then the buy order has to be automatically closed. So that kind of saves you the trouble of monitoring the market and always worrying and checking if the price has gone down, because you put this rule into your buy order, and as soon as this condition is met, your buy order will be closed. So this is the market going down against us. So we were thinking it was going to go up, but actually went down, and then bam, price crosses our stop loss and the order gets closed. Of course, this yields a certain loss on our account. So at this stage you would ask, why is a stop loss good, and if it brings losses? Well, let's see what happens to the market further down the track. It goes a bit up, it goes down, it goes up, and then it goes further down. So as you can see, there could have been potentially a much higher loss. Say this one, or even this one. So, or even more than that. And so it's better to control your losses and exit according to your trading strategy, and exit on time rather than overweight and bear a very high loss. So smaller losses are much better than bigger losses, and that's where your stop loss comes into play. It helps you exit the market, because what we're doing in trading is, we won't always win in all of our trades. There will be losses. Inevitably, there will be losses on the account. And it's all about managing those losses, managing those risks, and getting out of the market on time. And that's where your stop loss will help you control the losses on your account. It's a very important feature, and I highly recommend to always set a stop loss for any of your orders. Let's look at a stop loss for a sell order. So a sell order, we're anticipating a downward movement in the market. We can set a stop loss which has to be above the entry price, and that's because when we anticipate a downward movement, we will only lose if there's an upward movement. So let's see what happens in the market. The price goes a bit against us and goes kind of in our favor, but then it crosses our stop loss, and unfortunately there's a small loss on the account. Let's see what happened to the price going forward. Went up, went even further up. So if not for our stop loss, we could have closed the order there, or we could have even closed it there, and that would have been a much greater loss on the account. So as you can see, stop losses, even though they bring losses to the account, but they are very useful and very helpful in controlling your risks and managing any potential losses on the account. And so just a final note to finish off, take profits and stop loss can and probably should be set together. As I said, I recommend always setting a stop loss, and you can combine it with a take profit if you like. You can set both of them and attach them to one order. Finally, a word of caution. Sometimes when the market volatility is very high, for example, during market news, your broker may not be able to execute your stop loss. It is a very rare condition, but sometimes happens when there's just basically no price, no takers at your stop loss level or take profit level. There are two main classes of orders on the Forex market, and these are market orders and pending orders. And there are two categories in the pending orders. These are stop orders and limit orders, and we'll have a look at all of them right now. So market orders, you're already familiar with these orders. These are the buy order and the sell order. Stop orders. So the first type of stop order that I'd like to introduce you to is the buy stop. So basically the buy stop is a pending type of order. What that means is that when you set buy stop, you're not actually entering the market, you're setting a condition or a trigger or a future order. So you're saying, if something were to happen, then I want my terminal to enter the market automatically for me. So basically what this in this case was happening is you're saying that if the price reaches this green line, I want to enter the market with a buy order. So let's see how that happens. The price crosses the green line, and that's exactly when your buy stop order turns into a buy order. So from that red cross onwards, your buy stop order no longer exists. Now you have a buy order in the market. Sell stop order, very similar. So you're saying when the price crosses the green line, I want to enter the market with a sell order. See, when that happens, your sell stop order turns into a sell order instantly. So what's the benefit of these buy stop and sell stop orders? Well, it's basically kind of saving you the effort of actually waiting for the price to get to that level and then entering the market. So if you think that once the price crosses a certain price level or support line, you think the price will keep going downwards, that's when you would want to set a sell stop order and catch that movement as soon as it starts, rather than having to sit around and wait for it to happen. The other thing is that if that doesn't happen, if the price, for example, in this image that we have in front of us, if the price were to keep going upwards, then you would never enter the market at a sell with a sell order, because the price wouldn't have crossed this green line and wouldn't have triggered the sell order. So it's kind of a very convenient way to save your time and also check for specific conditions that you're looking for. Limit orders. Limit orders are similar to stop orders, but they may be a little bit more complicated to remember how they work, but we'll get the hang of it. So a BuyLimit order is actually set below the market. So what you're anticipating is for the market to go down, touch your order, cross it, touch it, and then go back up. So you're kind of anticipating a recoil. You think that yes, the market will go up, but first it will go down. And instead of entering right away, so you could have entered back here with a buy order, you want to get the most of this movement. So you want to actually let the market go down a bit, then enter with a buy order, and then you'll get this whole movement rather than getting only half of it. Once the red cross happens over here, your buy limit is no longer a buy limit order. It transforms automatically into a buy order and you enter the market. That's the point when you enter the market, when the transaction occurs, the opening of the order. Sell limit, it's a very similar concept. You are anticipating an upward movement before a downward movement. So you think that the price will go up, it'll touch your sell limit order, trigger it, and then go down. Once again, you would do this if you're anticipating an overall downward trend, but you think there will first be some sort of retracement upwards. And instead of entering the market back over here with a sell order, you want to get the full movement, so you let the market go up first, touch your sell limit order, and then go down. So in this case, even if the market price crosses your sell limit order, it will still be triggered as a sell order. So there's always these risks that the market will trigger your sell limit order, turn it into a sell order, and then keep going upwards. That can also happen, and your sell limit order will be triggered and you will be in the market. And that's why you should still use stop loss and take profits with your limit and stop order. So even with a sell limit order, for example, you can tell it to set a stop loss and take profit. Of course, a stop loss would have to be above, take profit would have to be below, and it works exactly the same way, because remember, once the order is triggered, it will either turn into a buy order or a sell order, and all the same rules apply as before. So with your pending orders, you can also set stop loss and take profit levels, which will be triggered with the order, meaning that as soon as the order turns into a buy or sell order, the take profit and stop loss levels will be activated, and they will be protecting your order as they would with any other market order.